Good evening and welcome to Bizworld. Malaysia's Consumer Price Index, or CPI, increased by 3.4% year-on-year to 127.4 last month, as food prices continued to rise at an accelerated rate. According to the Department of Statistics Malaysia, the food index surged by 6.1%, its highest in over a decade. All subgroups in food and non-alcoholic beverages recorded increases of 2.8% to 11.9%. Among food away from home that showed increases are roti canai and rice with side dishes. Chicken, the largest weight in the meat subgroup, increased 17.2%. The average price of processed chicken also rose above 10 ringgit per kilogram. Other groups except communications also recorded increases, with transport, restaurants and hotels recording 5% and above. At the state level, the highest increase in inflation was recorded by Putrajaya, while Labuan and Malacca are the two states with the lowest increases. MIDF Amanah Investment Bank has revised its full-year total industry volume, or TIV, projection upwards for the automotive sector by 5.4% to 607,000 units this year, given the stronger-than-expected performance so far. Momentum is expected to be sustained in the second half, given strong order backlog, which has now ballooned to almost 10 to 12 months TIV equivalent. Kenanga Investment Bank has kept its overweight call on the automotive sector with an 18% higher TIV target of 600,000 units this year. Earnings are expected to gradually normalize to pre-pandemic levels on the back of sector earnings growth of 22% in the financial year 2023. Meanwhile, Hong Leong Investment Bank expects a potential upside risk to its TIV expectation of 600,000 units following continued high order deliveries in the coming months, backed by the large order backlogs for key original equipment manufacturers. CGS-CIMB Securities, however, foresees a softer second-half TIV due to ongoing chips and parts shortages, weaker consumer sentiment, and potential reduction in the fuel subsidy program.
Now, who's our guest this week? He started as a consultant engineer in Australia in 1989. He received the Outstanding Property CEO Award in 2015. Above all, he has 30 years of experience in the property development industry. Eco World Malaysia's Datuk Chang Kim Wah speaks to Money Matters on how to stay relevant to the needs of the market. This Saturday at 5 p.m, only on TV3.
Malaysia aims to receive more than 5 million tourists by year-end, driven by the reopening of international borders. Deputy Tourism, Arts and Culture Minister Datuk Sri Shantara Kumar said the country is on track to reach pre-pandemic levels of 20 million tourists.
Dan saya yakin menjelang 31 Disembernya kita akan dapat lebih daripada 5 juta. Ini sebagai satu permulaan. Ialah kalau dulunya kalau ditanya kita boleh dapat lebih daripada 20 juta dan pada tahun 2019. Maka kita ke arah itu.
He was speaking to reporters after launching the Hotel Pass, the VIP Pass, offering a 6-night accommodation package across Malaysia. It aims to increase hotel room capacities in spurring the hotel industry's growth and recover from the COVID-19 impact. The overall total foreign outflow amounted to 4.1 billion ringgit last month, as foreign investors turned net sellers of Malaysian government securities, MGS, and government investment issue, GII. According to RAM Ratings, foreign investors have reduced their holdings by 4.3 billion ringgit after a brief respite in May. The ratings agency also said the foreign outflow was largely induced by fears of a more aggressive monetary policy tightening in the US, as well as risk aversion amid rising concerns over a potential global economic slowdown. The flight to safety sentiment resulted in a broad rise in bond yields, as the 1-year and 10-year MGS yields climbed to 33.1 basis points and 6.5 basis points month-on-month, respectively. Interest in the short-term government securities, Malaysian Treasury Bills (MTB) and Malaysian Islamic Treasury Bills (MITB) also remain positive, extending the inflow streak to 5 consecutive months. As investors continue to assess the economic outlook, it said longer-term yields are expected to remain pressured on the downside in the near term. Meanwhile, shorter-term yields will likely continue to trend upwards in response to further monetary policy tightening. And that's all we have for Bizworld this evening. With that, I'm Raymond Goh. Thank you for investing your time with us.